What's up everyone, it's Kadi with MoneyVest. So in today's video, I wanted to go over one stock that I strongly believe has a lot of potential. It's been selling off from its all-time highs. It is down a little bit over 25%. It was lower, but this week it is pushing back higher, up close to 6%. This has been a stock that's been on my watch list and my shopping list for a very long time. And it is oversold. It has been selling off, so that's exactly why I'm doing this video. As always, if you enjoyed, find it helpful, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. There's over 50 plus videos that you can watch. These are tutorials, technical analysis, fundamental analysis, educational videos, as well as my entire 30 stock shopping list with my buy targets and the MoneyVest index, as well as all the Discord channels and the trade alerts and trade ideas and options alerts as well. I also do want to mention that we do have a sale going on right now for all individual courses. The coupon code is going to be May50. All courses are going to be 50% off. Link's going to be down below. So the company that we're talking about today is going to be none other than Fortinet, the cybersecurity leader, ticker symbol FTNT. And, the stock has been very much range bound since 2021. So it hasn't really gone anywhere. It hasn't really done much since, I would say, August of 2021. It's basically flat for the last 3 years. It's only up like 70, 80 basis points. Year to date, the stock is barely beating the S&P 500, up over 6%. And in the last 1 month, it's down 5%. In the last 3 months, when most of the market is higher, it's down 12%, as it obviously got rejected at $73, sold off over 21%. And right now we're seeing this week, it's pushing back higher, up close to 6%. Now, when it comes to Fortinet, I wanted to go over their investor presentation. They are one of the best cybersecurity company because not only are they profitable, they are also very consistent. As you can see, the revenue growth over the last several years. I mean, this is absolutely beautiful how consistently the revenues have gone from 1.4, 1.5 billion to well over 5.3, and they're also profitable every single year, going net income from 31 million to well over $1 billion. That's been a very, very nice, fantastic growth in the company. If you take a look at the balance sheet, again, they've got negative net debt, so negative 1.37 billion. So we've got more debt than cash on the balance sheet. That's also fantastic. And free cash flow wise, also, you'll notice the company's been growing very, very consistently. I mean, this is one of the best financial statements I've looked at in terms of revenue growth, profitability growth, balance sheet, and free cash flow growth as well. And of course, negative net debt. With, if you come down to some of the efficiency metrics and profitability ratios, 16% return on assets, 129% return on invested capital, gross margins of well over 77%, which has been very, very consistent, operating margins of 23%, net margins, bottom line of over 22% for the company, strong, quick, and current ratio, and we've got very low debt to free cash flow and debt to asset ratios as well for the company, which again, fantastic numbers here. Now this right here is 21 days is what they have sort of estimated the industry average time for detection to remediation. So 21 days, if at all, and then time to contain is 4 hours, time to investigate 6 hours, and then time to remediate is 12 hours. And the new SEC rule is that 4 days is the number of days that you have to disclose material cybersecurity incident, and average breach cost is $9.5 million. And a lot of companies, I mean, 52% of organizations report SecOps is harder than 2 years ago, citing threats, attacks, surface volume complexity. So again, cybersecurity threat is real, and it's going to happen even more often as we get more and more digital in the world here moving forward, with technology being such a big part of our ecosystem, of our day-to-day well-being. Now, consolidation is accelerating to reduce risk and minimize complexity. So organizations pursuing a vendor consolidation strategy. Again, more and more companies are opting into using a lot of their products and services to kind of have steady protocols when it comes to security, and of course avoid such type of attacks. And then moving forward, of course, highly fragmented industry ready for consolidations. There's a lot of companies that are out there open for potential buyouts, right? So there's going to be some consolidation moving forward, and Fortinet and Palo Alto Networks are two of the largest companies, along with, of course, Okta, Zscaler, Cloudflare, CrowdStrike, also one of the top ones. We've got Gen Digital and Checkpoint, some of the top companies when it comes to cybersecurity. And a lot of these ones that actually have, significantly lower in revenues and, of course, profitability and market cap definitely are the ones that could be open to some type of acquisitions, right? Some buyouts, and of course taking over their technology, taking over their B2B business and users, and of course highly fragmented industry, as they pointed out, ready for consolidation as well, and of course a very, very large market as well. So total addressable market expected to go from 144 billion in 2024 to 222 billion by 2028. So the next 4 years, there's a rapid growth expected with secure networking 63 billion, 8% CAGR, universal SASE 21 billion, that's the most compounded annual growth rate of 18%, and security operations of 60 billion, that's going to be a 13% growth rate for the company. This right here are some of the metrics for Fortinet. So $45 billion market cap. We've got BBB rating on its credit, 27.25% operating margins here, and we got $5.8 billion in revenue with $6.5 billion in billings with $1.7 billion of free cash flow and a 33% margin, and rule of 40 since 2009, which is growth and operating margin, a combination of both growth and margins of well over 40% for the company. So they've been pretty stable and very much strong above that number. And this right here is actually why I feel like there's some growth that is now stagnating sideways. So we are seeing a little bit of consolidation. We're seeing some stabilization for billings and for revenue for Fortinet. So I think it's possible that they don't grow at 20, 30, 40% as they used to. And I think that growth number is going to actually start coming down. It's going to be a little bit more stable business as opposed to what we're used to seeing from Fortinet in the past. But that doesn't change the fact that it's a fantastic business altogether and still has a lot of potential runway ahead of it, considering the rapid growth in the total addressable market and of course the overall revenue and profitability as well. So 30% growth rate in deferred revenue, 5.7 billion as of fourth quarter 23, and adjusted free cash flow sitting at just under 1.9 billion, 35% margins here for the company as well. Now, what we're going to do is we're going to simply assume that if you come over to earnings estimate for Fortinet, right now trading at $61. So if you come over to earnings estimate, $1.77 is going to be the EPS estimate for this year. That's going to be an 8.69% growth year. So $1.77. So we're going to do a 7-year analysis, and share count 763 million times 177. We're looking at 1.3, 1.4 billion. So let's assume 1.4 billion for good measure. And then what we're going to do is we're going to essentially apply a growth rate for the company. So a growth rate of, let's say, let's start with 20%, right? 20% growth rate and a 20 times PE multiple. We're looking at a fair value of $53.50, which only means about a 13% potential downside from these current levels. But right now, Fortinet's actually trading at a much higher multiple. So if you come over to statistics, you'll notice that it's actually trading at almost 40 times price earnings multiple. And the thing is that it's actually been coming down. If you take a look at it on a quarter over quarter basis, I mean, at one point it was trading at over 56, 55, then it traded down to 40, then 40, and then now it's 44, and then more recent quarter current is 39.6. So it has been coming down, right? So from highs of 54, it's come down to 37. If we apply, let's say, a 25 PE multiple over the long term, now we're looking at a stock that is somewhat undervalued by 8%. If you go a little bit lower, let's say 22, now we're looking at a stock that is basically trading almost at fair value at $58, $59, $61, about 5% overvalued here, considering these numbers, with a price target, a future price target of $145 if they're able to grow net income, which is the bottom line earnings, by 20%. Now, I also do believe that that is actually a pretty high number. And one more thing I want to point out is the shares outstanding. So if you come over to the annual number, it's gone down from 839 million down to 761 million. So there's been some share buybacks over the years. So I'm going to plug in -1% for share buybacks and slightly lower growth rate of about 16%. Now, earlier, my fair value for Fortinet was sitting in the 40s. Now I'm updating this to $50, so $49.80 to be precise, close to $50, which only means about 20% potential downside needed for the stock to be trading at its intrinsic value, according to my conservative estimates of 16% growth over the next 7 years in earnings and a P multiple of about 22 with some share buybacks. Balance sheet's solid, margins are excellent, management team's good. There's a large addressable market with a rapid potential for expansion and growth here. And this is going to be the technical analysis coupled with the fundamentals that we just went over. There's going to be a very strong support over here at around $55. So that's going to be somewhat aligned with the intrinsic value depending on how you kind of spin those numbers. If you're assuming for a higher growth rate, again, this is going to be that sensitivity grid. So if you're looking for a higher growth rate and a higher sort of P multiple, then of course your fair value can be in the 50s, as much as 60s, even as much as 90s if you're expecting for a massive 24% growth and a 32 times P multiple. But again, it depends on person to person. So you feel free to pick a fair value which suits your sort of confidence level and what you believe Fortinet's future to be. But I'm going to be sitting closer to around $45 to $50 per share in and around those levels. But I don't mind actually starting a position or buying stock here at 55 at that support. But of course, a much stronger area of demand and support would be right over here at $45, $46. I mean, this right here would preferably be the best risk reward price for Fortinet. And since then, of course, we have rallied over 66% because it was trading at those levels back in October of 2023. So it's had a very nice recovery from those levels, but then of course getting rejected once again at this resistance of $73. So a triple top resistance at those prices. So got rejected here not once, not twice, but basically 3 times got rejected at those levels, and of course sold back down. Support level is going to stay put down to $55, $56 for Fortinet. So hope you all enjoy this video, and again, let me know your thoughts down in the comment section below. Links to our Discord and Patreon is going to be down below. Again, you access to over 50 plus members only private videos. There's a 16% annual discount available until the end of this month, and you can unlock over 20 plus Discord channels, including all the trade alerts and trade ideas and options alerts as well. And coupon code May50 expires at the end of this month, available for all of our courses, currently 50% off. As always, happy investing. I'll see you all in the next video.